Be sure to watch my TED Talk on londonreal.tv. This week on Silicon Reel, we have Philippe Botteri from venture capital firm Accel Partners with $10 billion under management.
We're trying to build very big businesses, and we want to back the founders who have the ambition. I'm speaking probably to 200-300 companies every year. I back the founders because I trust their decision. I have a lot of respect for every entrepreneur. They are the guys who are ready to risk everything. We probably invest in only one company out of 100. Being a venture capitalist is all about prioritization. Don't listen to the people who are saying it's not possible.
Silicon Reel presents Philippe Botteri, Accel Partners.
Follow your passion.
In London, technology is the Silicon Roundabout. Introducing a new talk show dedicated to the people of the London technology startup scene. Silicon Reel. Each week, interviewing entrepreneurs, venture capitalists, financial technology, accelerators, and incubators in an exciting three-person format. Learn about the people behind the innovation. Locally filmed, locally sourced. Silicon Reel. It's about the people. This is Silicon Reel, the weekly talk show dedicated to the people of the London technology startup scene. My guest today is Mr. Philippe Botteri, who is a partner from Accel Partners, which is a leading venture capital and growth equity firm with $2 billion under management here in Europe and Israel, and about $10 billion globally. Philippe, you focus on investments in security, cloud computing, and digital services, which includes the companies BlaBlaCar, which you're a board member of, who we had on the show a couple months ago, Docusign, and Hailo. Accel has offices in Palo Alto, New York City, London, and Bangalore, where you guys have helped build over 300 companies, including big names like Dropbox, Facebook, Groupon, Spotify, Squarespace, and Wonga. Philippe, before Accel, you worked in Silicon Valley for Bessemer Venture Partners, then McKinsey. Before that, you were in the French Navy. I'm sure you got some stories about that, but welcome to Silicon Reel.
Well, thank you. I'm very happy to be here.
Good. I'm sorry we're late to anybody who's streaming here. We were just chatting away in the kitchen about all things London. So let's jump into tech. You know, it's I've been reading your blog posts. You have some great articles up there, and I thought I would start off with one that people are talking about, but I want to get your opinion on, and that's this mythical creature everyone keeps talking about, which are unicorns, which seem to be everywhere last year. You know, there's been some exits. For people that don't know, I guess a unicorn is really a term for a company with a larger than $1 billion market cap, right? At least that's what it used to be. Maybe there's going to be new ones. And we see things like that with Supercell, you know, Criteo, Just Eat last year, King, Zoopla. You know, everyone now, including you, has talked about kind of the next $20 billion company coming out of Europe. I was wondering where do you see that happening? Is there a specific sector? Are we going to be able to do that in Europe? I just want to get your thoughts on that kind of general idea.
Well, I mean, the interesting thing is that the term, I don't really like the term unicorn, because a unicorn is something which does not exist, right? That's why it is a unicorn.
Who came up with that term?
I don't know, okay. But just if you look at our portfolio, so I was doing, you know, before coming here, the exercise, like how many companies in our portfolio in the past couple of years have raised more than $60 million, and just, you know, on the fly I could identify more than 12 already. Okay. You know, the largest one being Flipkart that raised close to a couple of billion last year. So we're seeing a lot of companies that are really reaching scale now, including in Europe, which I think is the real innovation, is because before people were saying, well, nothing's going to come out of Europe of meaningful value, and now suddenly, well, you have Supercell, you know, 3 billion. You know, you have companies like Spotify, you have Avito in Russia, you know, you have companies like BlaBlaCar in France. You know, who knows? Like, well, a company in France raising $100 million. Like, wow, you know, that's big news. What's happening in France? But actually, it's not only in France; it's the entire ecosystem now is really, you know, is really burgeoning. And that is because, I mean, we've seen the good, you know, this ecosystem in Europe at 15 years of experience now. And this is a time where you have repeat entrepreneur, you know, who are doing their second venture, of bringing more experience to the ecosystem, when you have people who have worked in the first generation of successful company and bringing that experience to new companies. And so we're seeing this happening. So now the question is, when is the $20 billion company coming out of Europe? I think we'll need to wait a bit, but we're making some very good headways.
One of the things that I've seen repeating here, we've done 75 episodes here on Silicon Reel, and one thing I've started to hear more of lately, including something that Nicholas said from BlaBlaCar a couple months ago, was they're not in a big rush to get to the US. And I heard that from Do Dill here in London, and from Nutmeg, and there's a few of these companies that aren't in a rush. And I know with Nicholas, he's like, we're going to Turkey, we're going to Russia. Is that something is that a strategy that will get to the 20 billion? Are these anomalies, these companies, or is that a new European strategy?
Well, I think the way I look at it, I think is it really depends on the sector and the business. And there are some sectors like software, for example, where if you want to be a leader in software and you want to be a multi-billion-dollar company in software, you need to be a leader in the US. So you will need to be in the US market. I think the sooner you're there, the better. In other businesses, which are more consumer businesses, I mean, you need to look at the entire world, right? Where are the consumers? And you're seeing there are a lot of people in Europe and Russia, in Turkey. There are a lot of people in India and China, and there are a lot of people in South America. And so, getting to the example of BlaBlaCar is you look at their business, and you're looking at the US and say, well, the cost of driving in the US is lower than it is in Europe. And BlaBlaCar is a long-distance ride-sharing company, so it works very well when you have cities, when people can drive between cities that are between 100 and let's say 600 miles. And you look at all of Europe, you look at India, you look at Brazil. I mean, you have this configuration. Same for Russia. But you look at the US, and the US you have the East Coast where you could have a hub. You have the West Coast where you could have a hub, but still, it's very distributed on the West Coast. I mean, if you go from LA to San Francisco, for example, the last mile is really a problem, right? Because picking someone in Santa Monica is very different from in Huntington Beach, and it could be just 1 hour to get there. And then when you're in the Bay Area, are you going to San Jose or San Mateo or Oakland? And that's another hour on a trip, which is 4-hour drive, and therefore you have a lot of friction. So when you add this all up, you say, well, is the US the most attractive market for BlaBlaCar? Probably not. I mean, look at India. It's 1 billion people, probably a target market of at least 300-400 million who are connected people. It just feels like a more interesting opportunity. And I think if the service really works, in India and in Brazil, I mean, I think hopefully you can reach some of the valuations we talked about.
Right. So no rush right now to get to America for BlaBla.
Exactly. Yeah.
Okay. We were talking earlier about the sharing economy. I know BlaBlaCar really isn't ride sharing because it's kind of a different concept. But you said on one of your blog posts that sharing isn't about cost, but it's about value. And so it's something. I recently had an Airbnb trip where on New Year's Eve I went over to Belgium and I stayed in this flat, and the guy picked me up from the place, and we got to see his quirky little place. We communicated with him, and for me it was a cheaper price. And it was about 10 times more value than staying at an impersonal hotel. And from now on, I'm just not going to use the hotel industry anymore. And is that something that you see developing with BlaBlaCar or some of these other sharing pieces where people are getting a lot more value out of what used to just be a simple transaction?
Well, exactly. I think the important point about the sharing economy, which, and I'm not talking, I mean, there are different type of sharing economy, right? You have the C2C, which is what BlaBlaCar is doing, which, and what, Airbnb is doing to some extent, which is really consumer to consumer. So it's not a business that someone in running like Uber, for example, and that's why I think Uber is very different from BlaBlaCar, because Uber is basically a professional driver that you're calling with your mobile phone. I mean, there is no real sharing there.
Right. There's not a real community there, is there?
Exactly, and it's not a community-driven model versus BlaBlaCar. It's the way you characterize is a community is when people are doing both, right? They are both in BlaBlaCar, you're a driver, but you're going to be a passenger sometime. In Airbnb, you may rent your second property, but you will also potentially rent a property for your next vacation, and I say Airbnb, but it's the same for House Trip, which is, our European competitor, or, one of our portfolio companies. So it's all this economy, which is all about really sharing between people and people who are basically part of something where they want to share. And for them, it's not about only just the pure cost. It's about, what is the value that they're deriving from this entire, being part of this community.
You're a VC. You're one of the partners at one of the bigger VCs, and a lot of people, they look at VCs because they don't get to see them very often. You guys are kind of almost like celebrities, because a lot of the startups are thinking one day, and they don't know really what goes through your head. And I was wondering if you could describe to us, what is it like being a board member on a company like BlaBlaCar? I was listening to these lectures from Y Combinator recently at Stanford called How to Start a Startup. It was like a series of 16 lectures, and one of the guys said that 95% of all board meetings are consensuses. He said it rarely comes to a fight in the boardroom. Usually it's already been discussed before. And I was wondering, is that true? And if so, why is there a voting in a board? And what is it really like, when you go to these quarterly meetings? I was wondering if you could just kind of take us behind the scenes.
Yeah, I mean, every board is different, but I think, taking the BlaBlaCar example, for me, I feel, very lucky to be part of this story. And for me, the board meetings is just, the time where you get to meet the team, but it's only one aspect of the interaction, because I think I personally like to develop a very close relationship with the founders of the company I invest in, and therefore, for one board, kind of every couple of months, there are multiple phone calls and interactions in between, and it's all about, getting part of the adventure, and trying to help the management, help the company succeed by bringing the resources that you can bring, but without interfering with. I mean, they are the manager; they are managing the business day to day, and we don't want to interfere with that. But we just want to be the person behind who can provide the help that that we can. I mean, one of the example of the things that we did with BlaBlaCar. So we did our first investment in end of 2011, and as part of the due diligence process. We looked across all the ride-sharing companies that were in Europe, and we found a lot of small companies, and in particular there was one in Italy where we're not going to invest in that company, but it is very strong. It was a couple of people, very strong, same vision. I said, well, we can't invest in you, but maybe it would be interesting for you to get to know the BlaBlaCar team, because I think you could be a great addition. So I put them in touch, and by the time we closed the the investments, that acquired that company, and they launched in Italy a few months later. So this is the type of value we can provide by providing this outside look at the market, and trying to help with recruiting people, help with strategy, potential acquisition. And that's our way to try to be part of the adventure.
And how do you walk the fine line between interfering with founders' vision and helping out and directing? I mean, that's ultimately the hardest job.
We're not. I mean, the thing is, we're not directing. I don't really like that word, okay. Because the founders are. I mean, they are living their business day to day. And if I invest in a founding team, it's because I trust that they will make the right decision. And so I see my role, and that's the first thing I said to every of the founders. Every company invests in, I tell the founders, I'm going to tell you things, and your role is just to filter whatever I say to you. Take whatever you think is interesting, and just discard whatever you think is not interesting. And so for me, I mean, I'm just trying to give input based on what the things that I'm seeing that, they're day to day in their business. I'm seeing a lot of businesses because, I'm speaking probably to 200-300 companies every year. So I'm bringing this external perspective. I'm seeing all the things on the market in other regions that they may not see. And, I try to share that experience with them, I think, and then I count on them to take whatever they think is relevant and apply it to the business. And then there's some, at some point there may be some strategic decision, or should we make an acquisition, this acquisition or not? And, I'm happy to be part of the debate. But at the end of the day, I think the founders are, they know the business day to day, and they are making the decision. And if I back the founders, because I trust their decision.
Does it ever go to a vote in the board? I mean, is it always a unanimous or sub-unanimous?
Well, that's the thing about voting is everyone talk about voting right, but I've been in this business for close to 10 years now, and I don't think I've ever been in a situation where there's been a formal vote on something.
Okay. So it's all about kind of building a consensus and go in behind the scenes and taking a direction, and people agree, you're saying?
Well, exactly. I mean, at the end of the day, I think it may take some time at some point to get alignment, but I think I haven't seen board where decisions are not, taken at the end of the day when everyone is aligned with them.
Okay. Nicholas said something interesting to me when I had him on. He said, when you want advice, ask for money, and when you want money, ask for advice. And he said that he doesn't look at fundraising for a company as a photograph. He says he looks at it as a video, as in you should constantly have a dialogue with people about funding and venture and things like that. Do you agree, disagree? Is it that simple?
I totally agree with...
I'm not going to ask you for advice right now.
Yeah, I totally agree with what he's saying. And just taking a few examples, just giving with the BlaBlaCar example, I knew Nicolas since 2004 because we were in the Valley together. And that's actually a funny story because so in 2007, we had at that time, so he was leaving the Valley going back to INSEAD. And then I remember we had a dinner at my house and in San Francisco, and he was telling me, I've invested in this company called BlaBlaCar. I put an angel, I participated in the angel round, and he described me what the company was doing. I was like, it's an hitchhiking company. Nicholas, you're going to lose your money. Sorry for you, you're going to lose your money. And then I saw the evolution of the company and really started to grow. And then when the company formally raised a seed in 2010. So I spoke to Nicolas at the time, but and they had 100,000 members in the community, and it was really taking off. Like, well, I think I was wrong. It's very interesting, but I was in Silicon Valley. It was a seed deal in France, and probably not the right fit for Bessemer at the time where I was. So I didn't invest in that round. But then when I came back to Europe, mid 2011, then I jumped, and that was a time where Nicolas joined full time, and I said, well, this is it.
So do you think if you hadn't known him, maybe that investment might not have happened?
Well, I think the fact that I've known him for a long time and I've seen the movie, like this company, starting from zero and getting to 100K and then getting to 1 million. And then when I really started to dive into it, in the back end of 2011, I said, well, wow, I thought the market was small because I looked at it as this is kind of hitchhiking. And then I realized, but this has nothing to do with hitchhiking. This is trust. This is a community which is based on trust, and and this is low-cost travel. It targets a market. And when I look just in France, there's 700 million trips of 150 miles or more. 700 millions. And they were at the time just doing, maybe 1 million a month. So it was really a tiny, tiny market share. And I'm like, wow, just in France, it can be very big. And then if we project that in other countries, it can be really, really massive.
So do you always encourage your portfolio companies to keep up dialogue with, future investors, or do you encourage that to any startups that are watching us to constantly have that dialogue, as opposed to this digital effort? Every time you want to raise money, you go ask?
Well, exactly. The analogy I would take is like, when we're a long-term investor, when you invest in a company for, on average 7-8 years. So it's not like a marriage, but it's close to a marriage.
Longer than a marriage.
It's like, well, if you're trying to, get married, are you going to meet the person and try to get married in 2 months, or, is it better to have known the person for a longer time? And the answer is obviously the latter. And so, getting to know a set of VCs that you're comfortable with, that like your model, but maybe you're not at the right stage right now for them, or you're missing something that they want you to demonstrate to get there. Keeping in touch with these people is great, because whenever you're going to have, you're going to walk over that tipping point that is going to make them really interested in the company, then they will have all the history with you, they will trust you, and the process will be very smooth. And then on your side, as founder of a company, you really want to know who is going to get on your board, and you don't want to have surprises afterwards. So that's why I really like this idea of keep meeting the VCs, give them updates, once every 6 months, so they know you, you know them, you see how they how they react when you tell them the different news, and try to leverage a bit of their network. If they like you, even if you're not in their portfolio, they may give you some help and some tips and help you recruiting, and that's how you build the relationship over time.
Okay, so if someone's a startup and they want to approach you, what is the best way and then the worst way to approach, well, let's just say you as a partner?
Well, I think let's start with the worst way, because that's the easy one, which is just pick my email address somewhere and send me an email out of the blue. Because I receive a lot of email, and sometimes if I'm traveling, etc., it's just hard to process everything. And especially if I don't know the person, don't know the company, and it's not a space I'm interested in, it's not very high on the priority list.
Right.
So I think the key is just getting an introduction. I think that's what is very important. If you want to get in touch, just find a way to find something that the person relates to. And if you're in the the European tech ecosystem, I'm sure you will find a way to be connected to one of our partner, our associate, or find an entrepreneur that knows us, and try to get a friendly referral. Because if I have, for example, the CEO of Criteo, which I know very well, is sending me an email saying, "Oh, I met with this entrepreneur. What he's doing is interesting. You should look at it." Clearly, I'm gonna talk to that person and follow up on the introduction. So just something small. Find something that the person is going to relate to, and that really helps you get over the hurdle of, well, this is something on my side now that I know I need to do, and we'll
right. So there's still value in a warm introduction.
Oh, there's a lot of value in that. Yeah.
Okay, because a lot of people think tech is disrupting everything and everyone's available to everyone, so that doesn't apply, but it does apply, right?
Yeah, it does apply because we got a lot of deal flow, and there is a first layer of prioritization we need to apply, and getting a friendly referral, I think, really helps.
Okay.
But then, in many cases as well, we are top-down. We have a top-down approach to the market, so we have several trends that we're following very closely, in which we are proactively contacting entrepreneur.
Okay.
So on our side, I'm also sending emails to entrepreneur that I don't know, but I really like their business, and I send them an email to tell them that I really like their business and want to speak to them.
Do you ever get rude replies from entrepreneurs like, stop sending me these cold introductions? Do people ever say that to you, or not really?
Well, I try to do the same in some extent, try to find a warm introduction to that entrepreneur. But if I can, I just try to send a nice email and try to explain why I think their business is interesting, here's our experience in the space, and what we can bring to the company. And sometimes it works, sometimes it doesn't. If it doesn't, you try again, find another way.
Right. Let's talk about profile. Fred Wilson is a VC in New York City. He writes a lot on his blog. I think someone said he blogs every day. I don't know if it's that true, but he spends a lot of time putting content out. How important is it for someone like you, to create content, or, to build a profile? So maybe not necessarily you get contacted by everybody via email, but people know you. And so they're like, yeah, I know that guy. I saw him at the Disrupt conference. I saw him on Bloomberg. How important is that for you?
Well, for me, it's not about being known. I think for me, it's about feeling approachable and making sure that, whatever an entrepreneur, when he wants to seek funding, is going to say, well, this guy is writing things that are interesting. I've seen him at a conference. He's talking to people. He's approachable. I want to speak to him. I think that's what I'm trying to achieve. And so when I write my blog post, I don't write as often, unfortunately, because it takes a lot of time. But I try to find a topic that is going to be interesting and valuable for an entrepreneur, where if an entrepreneur is reading this, he say, okay, well, he clearly knows about the space. He has thought about it. He's giving me some things which are making me thinking, and maybe some piece of advice that I find valuable.
Yeah. When you write deep, so you can tell that you have thought about the blogs that you write about, and that's in your expertise. Definitely. Let me ask you about other VCs. We had Ben Holmes in here from Index, which I'm sure you know from Just Eat. You have a few investments with Index that you guys along the way, Moshi's and a few others. But they are ultimately a European fund, right? They started in Switzerland, now they're in London. I know they have offices in San Francisco, but Accel is, it started in America, right? And so I was wondering how that changes your job on a day-to-day basis. Is it a difference when you have a powerful American base expertise or a history there. Also, you have a history of the guys in America, with this, $12 million investment in '95 in a thing called the Facebook, which I'm sure you've heard about ad nauseum. But like, is it weird to go from an intimidating track record like that to come over here and do something with the same name, on the door?
Well, I mean, I think what was really important for me when I moved back from the US and decided to join Accel, I mean, what I found very attractive in the Accel platform is that it was a Silicon Valley culture. And I think that's what we're trying to bring to Europe is this Silicon Valley culture. And all of our partners have spent a significant amount of time in the Valley. And a lot of them have learned the venture business in the Valley. And it's a bit different from the VCs.
How is it different? Because you're basically a product of the Valley, right?
Well, that's where
your accent isn't American, but you are.
Well, yeah, my accent will remain French, unfortunately. But I spent about 10 years in the Valley, and that's where I learned the venture capital business. And so I think that there are a lot of things. It's about understanding the size of the opportunity and focus. And a lot of the temptation is just to be too focused on just the numbers and try to minimize the risk to get to a mid-size outcome because it feels less risky. And a lot of the funds, I mean, if you just do the math, if you're $100 million fund and you have a $100 million outcome, that sounds good, right? You own 20-30% of a company that bring half of the fund or 1/3 back. It feels good. So you would try to optimize for this type of outcome. When on our side, like we're a larger fund and we're a global fund, and we see that it's actually possible to build very large businesses, and that's what we're looking for, and that's what we're bringing. The value we're bringing to our portfolio companies is global network. We want them to go global. We want them to build big businesses, and we're really raising the ambition of the company. I mean, one of the things which I think is I've seen it a few times, so that's why I want to mention it, is you see a company that's pitching you and they're showing you some projection and you're like, this is nice, but doing 10 million in revenue in 4 years from now is good, but do you think you can do better? And their answer is, well, we think we can and we'd be happy to, but the feedback we got from a lot of the VCs is that if we put numbers that are too high, then they're just saying it's not realistic. And so we want to be more...
This is a European answer.
Well, yeah, exactly. Okay. So when I say, well, on our side, we're trying to build very big businesses, and we want to back the founders who have the ambition. And that's kind of the culture we're bringing to the companies. Be ambitious, go global, and try to really change the world. Like, you need to have a piece of technology, believe that the technology you're building is going to change the world.
So it's ultimately about risk appetite, really, and being comfortable with risk. I mean, that's almost a personality type. Can you teach that?
Well, I mean...
Or is that a culture?
Well, I mean, I think it's part of the overall culture. It's part also, I mean, another side of this culture is trying to be... the way you're involved with the company and try to be probably, I would say it's not a question of being supportive, but I think try to help more the company in recruiting, be more closer to business, etc. But I think that there's some excellent VCs in Europe, and we're partnering with a lot of European venture funds. So I'm obviously very respectful of what they're doing. I think we're just trying to bring this Silicon Valley experience.
Off camera, we were talking about one of your pastimes, which is free diving, where you hold your breath and go underwater for a long period of time. Now, that's about risk management, right? I mean, are there parallels here a little bit? Because, you have to be comfortable with risk, but by definition, we're not as humans. So, I mean, is it a certain personality type that's comfortable with this?
Well, I mean, there is a parallel, which, you can be underwater for a long time.
How long?
But, I mean, I think... free diving, I think, is all about, being in an uncertain environment, but being very relaxed about it. And I think
sounds like investing.
Yeah, exactly. I mean, there's some analogy with, especially in the venture business, because there are a lot of times that are uncomfortable. There are some times where the road is shaky, and that's where you need to stay calm and follow your road, and believe in what you're doing, and if you focus and believe in what you're doing, you will succeed.
Fair enough. Fair enough. What is the hardest part of your job, and what is the main job requirement for being a VC? Is it the risk management, or is it a bunch of different skill set? If you look back on 2014 and you think about the hardest time you have, I'm just curious, what is it?
Well, that's that is a tough question. Actually, it's. I don't know how to really answer that question.
I mean, I'm guessing for a startup, it would be, raising money, or it would be, an MVP, that kind of thing.
But the thing is, our job is made of so many different things, right? And it really depends at which stage of life cycle you are with your investments. But I would say if there is a thing which is that we have to do very often, and that is not very pleasant, is at the end of the day, I have a lot of respect for every entrepreneur that is walking out of the door, because they are the guys who are ready to risk everything, right, to achieve their vision. And sometimes it's just not a good fit for us to invest. And actually, a lot of the time, because we probably invest in only one company out of 100 that we're seeing, that means in 99% of the time, we have to say, politely, no, it's not a good fit. And you're saying that to people who have a lot of passion, have put a lot of energy. It's not, I think that is what I see as the hard part of our business. That's the hardest part. Is because we have 99 no's for one yes.
That's a lot of no's. How do you say no in the right way? It must be something you've practiced, because you really do have to say no in the right way, because you kind of said no to Nicolas, like back in 2007. You even called us a little crazy, and then it comes full circle. So the way you leave relationships must be really important.
Yeah, I mean, it's not an easy way to say no to someone, especially when getting financing is such an important event for a company. So obviously, the company has a lot of positive discussions going. It's easier. Sometimes they don't have, and you're like really counting on you. So I mean, what I try to do is be as helpful as I can in terms of defining what I like about the business, what are the risks and things that that the company needs to prove, and try to give them where they need to go to meet the bar that will make us invest, so that they have something to look forward to, and they have trying to give them some advice on how to push the business further and get to the point where we can invest.
Right, and feedback as well, that helps them.
Exactly, yeah. But it's not an easy thing to do.
You've mentioned that Europe is a collection of tech hubs. I think it's your words, where there's all these cities. We've seen it, Paris and Berlin and Tel Aviv. You guys are active in Israel, whereas the U.S. is a very bi-coastal environment, I'm guessing. How does that change your job? I know you go to Heathrow a lot, but how else does it change the ecosystem when all these things are happening in different places? Our show is always talking about London because I'm in London, and I apologize, but you see the whole continent.
Yeah, so the challenge is try to understand exactly what's happening in all these cities, because there's a lot of things happening in many cities which are distant, and so how do you make sure that everything that's happened and you're in the relevant discussions and the great companies in each of these hubs? I think that would make this business very challenging, because in the US, I mean, 80% or 70% of the market is in the Valley. Then you have 20% or 30%, in New York, and a bit Boston on the East Coast, and then a bit of everywhere. But here in Europe, every city is distant by an hour, 2 or 3 by plane, and you need to be present in all these hubs and tie the relation, have the right relationship, with the angels and with the other funds you're working with all the companies. So you need to be, and the way we're trying to do it at Accel is really to be focused on, by areas, and then try to follow these trends, across Europe. But we think that the sector and area expertise is what is really important.
What do you think that we need to do differently in London and in Europe in the next year or two? I know you mentioned to me earlier that you try to stay in touch with legislation and try to let them know what's going on or what needs to change. But I mean, are there anything big that really sticks out?
Well, in terms of regulation?
Yeah, regulation, legislation.
Well, I think right now there is a lot happening around the sharing economy, which is a space where I've made a few investments, with BlaBlaCar, Housetrip, and Accel, and these businesses are actually doing new things, and we need to make sure that the regulation for that is in place. And this regulation doesn't exist. And if you take a business like Hassel.com, for example, they're not an agency, right? They're not an agency. They're not someone who employs a cleaner. They're just someone who facilitates the work of a cleaner. And there is no legislative framework today that really apply to this. And it's clear that if they were to be considered as an employee, then they wouldn't have a business, because right now they're managing 2,000 cleaners, and it's growing pretty fast. If they had to have 2,000 cleaners on their payroll, it wouldn't be viable, right? And so I think what I see, which is very encouraging, is I think all the governments in Europe are very supportive, because they understand that technology can create jobs. And therefore, it's something that they need to support, for the better of the economy. And so they are very open to have, these discussions and see how we can adapt the different legislation to make sure that this ecosystem can actually grow very nicely.
Right, tax issues, employment issues, that kind of thing are important. Yeah. I did an informal and an unplanned case study a couple days ago. I ordered an Uber in the morning. It was taking too long, so I switched to Hailo. It came on time, and then I ordered an Addison Lee that came this morning, and I got each ride-sharing service. And I know you guys are investors in Hailo, and it's funny how depending on what news you read, one is doing better than the other, but it's still a competition out there, isn't it? And I was wondering what you see the future of ride sharing here in London and the rest, because you guys, know Hailo well, but everything's changing, right?
Well, I hope the future is going to be full of Hailo, but
right, of course, and BlaBlaCar.
Well, BlaBlaCar, as I say, is it's different because it's long distance. So I mean, the good thing is right now is they don't have really real competition. So there's for BlaBlaCar, but just for the kind of the Uber Hailo space, I think it's it is a space that is becoming very competitive, and I think each company is trying to bring something a bit different. With Uber trying more, they're focusing on black cars, and Hailo has been focusing on black cabs. And the benefit of black cabs is that they know where they're going, and therefore it has some benefits, especially with they can use the bus lanes, and if there is a lot of traffic, they know where you go. And I had a funny experience with Uber when I was in Warsaw, and Uber just launched, and I said, well, Hailo not being in Warsaw, I said, well, I'm going to try Uber. Okay. Exactly. So I got into my Uber, and the thing is, on the Uber app, you can only put the name of the street name. So I put the street name in the application, and get into the car, and the guy starts driving. And I was going to a meeting which was like 10 minutes away, and I took a cab just because I wanted to make sure I would be on time. Then I start, playing, doing email, etc. on my iPhone, and suddenly I look out, and I'm like, we're on a highway. Where the hell I am? And then I look at the Google map, and we're driving out of town. Like, I don't know where he is going, but it's really going far. And I think and then I tried to stop the guy, but he wasn't speaking English. So it took a bit of time to actually get him to turn back. And then I found a hotel close to where I was going, where the address was unique. And what I realized is the name of the street that I put in the system was called, the translation was John Paul II. The Pope, and therefore there are probably thousands of these streets in Poland, and I'd pick a street which could have been 500 miles, and the guy was just driving there. So just funny anecdote to say that I think sometimes it's very valuable to have a driver who knows where he's going.
Right, and the race is still on in London, right?
Yeah, I mean really definitely. Is. I mean, you see your experience, right?
Yeah, it was fascinating because it's a media game to a certain extent, and it is a media game because you have to convince people to kind of be thinking like these are my options and these are the best things. And so I was surprised to see that, and I actually, Uber contacted me and said, why'd you cancel the cab? And I told them why, so I don't know. Anyways, there you go, they got Hailo. You were on the stage at Disrupt a few months ago, and with Saul and everyone else, and someone brought up Wonga, and everyone went quiet. I actually wanted to have him on the show about 6 or 8 months ago. I actually think Wonga serves a need in the market, and I think it's a business model that's been here for a long time, and it's going to continue. And I was just wondering, is there things that you say about this when people ask you, or is that company going to continue to do business, and are we going to hear more about it in the future?
Well, I mean, I think things are very dynamic, and so I don't want to comment too much on it. But what I'm going to say is that this is a company that has been very successful, has been going through a transition, and we've been helping them going through this transition. And it's hard to predict the future.
Fair enough. That's a good answer. I always wanted to get him on because I'm from the capital markets myself. So when I see something like that come and then fill a need, I mean, obviously there was some mistakes made in some media, but it's that market's not going away. So it will be addressed, I think, at some point.
Well, I mean, I think any market where you see that you have millions of people using a service,
yeah,
there is something behind
There's
it,
something
right?
There. All right, stay tuned on that one. Mobile. I mean, we see mobile pay, we see mobile everything. When Nicholas was here, he said in Turkey the amount of people using BlaBlaCar on mobile was sky high. And I mean, we all know mobile and know it's coming as one of your blog posts. But how is it really going to change things in 2 years? I mean, is it going to be a world we don't even comprehend yet with all of that mobility?
Well, I think mobile is it was interesting in mobile to see, what is the right platform. I mean, mobile, the big change that happened with the launch of the iPhone, in 2007 was suddenly your phone moved from a phone to being a mini computer that you have in your pocket. So suddenly now you have a device where you can have any type of applications in your pocket with location, a device which is location aware. So that's the big change. And so since 2007, we've seen a flurry of applications that have been developed and that are actually changing really our lives. And then on top of that, there's been an evolution in terms of the size of the screen, right? And there was, the iPad and then the iPhone and then anything in between. Now we're seeing iPhone that are, very close to the iPad mini and the iPad mini. So I think the net is that there is a ton of value of having a small computer that you can carry everywhere and that is location aware. And that's opening a ton of new services. And so, it's like computing, like the PC 7 years after the PC, right? Once the first PC was invented, 7 years later, you had a bunch of applications, but you look 20 years later and you have a ton more application. And I think that's, we're following the same phase with mobile. So I would expect, I think it's more than 2 years. I think in the next 5 to 10 years, we're going to see a lot more things happening on mobile. And the real question is, in 10 years from now, will we still need, a desktop or a PC? Or is everything going to be in just one device that's going to be ultralight and have all the computing power that we need?
Yeah, there was an article in the Times about like the new iMac and how it really is made for people that use it for very specific things, filmmakers and editors and photographers. And for that, there's a great niche. But for the person that used to just have a PC for no good reason, that's kind of going away, to a certain extent. So I was wondering if what you see as far as being in the UK, you've been back for 4 years now, what you see as far as valuation. Do you find that at certain points you have to pay more than you thought you would for a company? Do you have to kind of walk away from deals? I mean, you kind of look at the equity markets here, but I know a lot of your exits aren't going to be for many years. So how does it feel now? Is it a good time, a frustrating time?
Well, I mean, right now it is a frothy time.
Right. Okay.
And if you look at the size of the rounds and the valuations out there, I mean, if you look at the venture capital history in the past 30 years, there hasn't been that many times where a company could raise $100, $500, $1 billion in the private market.
You're talking about, say, 100 is a blah, blah, a billion is, say, Uber and others.
Yeah, or Flipkart. Right. I mean, this is, Cloudera raised 900 millions so these windows are very, very unique, and they're a sign that we're, in frothy markets. I mean, the good news is that a lot of these companies are actually a very strong business model, but that's, I think part of the thing right now is valuation are very, very high, and therefore the round size are quite high. And so if you invest in a proven business, if you're in Cloudera, I mean, that's not going to go anywhere, right? But now we're seeing a lot more very early stage companies where the business model is not proven, and they're raising 20, 30 million. So it's not 100 million, but it's like 20, 30 million for a company which maybe at the Series A stage, when there is still a lot of risk because you don't know if there is something real. And I think when you start thinking a lot of these things happening, I mean, that's where I think you need to be very cautious and very selective in your investments.
But it's tricky because you might see something you really like, but you don't want to get into a bidding war, and it makes a difficult call for you.
Exactly. So I think selection and focus, like you need to really pick the one that you like.
Right. Okay. And so obviously it can't stay frothy forever. So we're going to see what happens in the next couple of years. There could be slight corrections. Who knows?
Well, I mean, at some point, I mean, this industry has evolved, by cycle, and that's how the industry works. I mean, you start to have, a lot of the cycle, there's little activity, then you start getting good companies, funded, and then these companies go public, and then, we had, Facebook and LinkedIn, and that creates a lot of hype, and that attracts a lot of money. Valuations are coming high, and, when there is a period of time where valuations are high, and, usually the returns are lower, and therefore there is less money coming in the market, and that's how kind of the cycle evolves. So at some point, the cycle will turn.
You guys just raised a big fund, right? A recent fund, $475 million?
Yeah, we raised about $475 in 2013 and started to deploy this.
So what's your biggest challenge this year? Is it investing that money, or are there other challenges for you?
Well, no, I mean, I think what we're trying, to do in this frothy time is we encourage our portfolio to raise money, because that's a good time to actually start building your war chest, so that when the rates start to fall, you're actually have a lot of buffer. So that's one thing. So that means there is a lot of work to do on the portfolio side, and then I think on the investment side, I think it's just hard. We need to be very selective, and all the late stage company we're seeing right now very high price. So that's we tend to go earlier, because I think if you invest early, even if the valuation is high and you pay 40 or 50 million pre instead of 20 million pre, if it's $1 billion outcome, you still make a very sizable return. But if you pay a $700 million pre and instead of 200, and if it's $1 billion outcome, your return went from 5x to 1.3x, and then you don't make a living. So that's where I think the challenge of this year is trying to be moderate about the investment pace, and try to be very, very selective, go early stage with good ownership, and try to be, I think, very strict in terms of valuation.
What do you miss most about California? That's where I'm from.
Surfing.
Surfing, yeah. It's hard to recreate that over here.
Well, exactly. So you just need to take on a plane, and you can go in Cornwall, but usually when I try to go surfing, either when I'm back in California, because I go there several times a year, or we go, south of France or Portugal on the Atlantic coast. There's some very good waves there. Okay, good. I always ask everyone that comes on a couple questions here at the end, and I'll ask you if you could make a phone call to the 20-year-old Philippe. Maybe he was in the Navy then, I don't know, but what advice would you give to him? Well, I think the one advice I would give is just follow your passion. Because at the end of the day, I believe that people can be very successful if they really like what they're doing, because being successful requires a lot of commitment, a lot of time, and you really need to be passionate about something to do it, and you need to like doing it, and that's how you're very good. I mean, one of the things during my life that helped me realize this is, I tried to learn German, and I'm ashamed to say that I learned German at school for probably 10 years. To the point where at some point I was able to read a book in German, but for some reason I stopped practicing 2 months, and then I would forget all the words, and then at some point I realized, well, life is too short. It's not something for you. Just stop doing it. Then I learned Italian, and for some reason I learned Italian, in a couple of years, and I was able to speak, and then I did some McKinsey studies there, and then that stayed. And I'm like, wow, why do you push yourself in doing German? Because everyone told you that it was good to learn German, and it was something that was not for me. So you had no passion for it. Exactly. These frothy markets, and I'm sure my show doesn't help. Do you see people that are getting into tech because it's the rock star thing to do? And do you sometimes walk into meetings and you're like, is this your passion, or is this the way you think you're going to get paid? Do you see that sometimes? Yeah, clearly I see that. And I see that with the inflow of people that are contacting me right now and wanting to learn about venture capital and about startups, which it's clearly, so some of it may be genuine and trying, but some of other people, you look at their background and you're like, why do you want to do that? You've done a lot of different things which are great, and why would you try to change career right now in something where I think it's a very risky time to do this change right now when you're at the hype of the cycle. Right. Yeah, and you can tell, I'm sure, right away. You know the signs. Best advice you've ever received. Let's go business, and maybe something that you've learned out in the valley that at Bessemer or somewhere else. Well, I mean, I think one of the advice I received, I think, was really, I mean, shaped, I think, the way I think when practice business, and that's true for a lot of things, is the 80-20 rules, which is something I learned at McKinsey, which basically you need to be focused. You need to be really focused on what matters. And I think that's every day our job, being a venture capitalist is all about prioritization. I mean, we're talking 200 companies, and time is our scarcest resources. You want to make sure that you allocate the time where it matters, and that's true for the work we do with the portfolio, and that's true with the way we were, when we were trying to select an investment. And that's an advice that, that's true for any manager in a company. Just focus your time on the 20% thing that is going to have the 80% impact on what you're doing.
Is it triage over at Accel? Do you sometimes look at your day and you're like, this is triage, I've got all these important things to do and I have to pick out the most important thing?
Well, I mean, every day, because, in our job, I could have 3 times the time I have and still, be busy, right? Because there's an infinite number of companies, there are an infinite number of articles I can read, there are an infinite number of things I could do for, trying to help the portfolio. So that, I can do some, media interviews, write blog posts, meeting companies, travel in a lot of countries. So you really need, attend conferences. So you really need to be focused in terms of, in the way I tend to think about it is like, what are the areas where, I really want to invest this year? And how do I make sure that, I get smart about these areas? And how do I make sure that I speak to the best companies in this area in Europe? So yes, it's all about prioritization. Interesting.
Do you have a morning routine that you do? Do you just get up at a certain time and have ways that clear your mind? I mean, do you have a way that you try to focus during the day?
I don't have anything specific, any routine I do every day, but I like to exercise regularly because that's a way for me to just clear my mind. And I find that after working 2 days, work 25 hours, a long time, you have a lot of stress that you accumulate, and just for me, exercising is just a way to get more relaxed. Have an hour where you don't think about anything that basically helps you refresh and kind of clear your mind.
Yeah, it's crucial. All right, last question. You kind of gave a little bit of advice before, but to someone that's watching, that always wants to get a meeting with the VC, et cetera. I mean, advice to people watching that are starting their own companies. Do you try to tell them to go and find a market, find some traction, and then come talk to you? What do you generally say to people? Because people want to know.
Well, so the first thing I would say is don't listen to people who are saying it's not possible. Because when you start a company, you're going to hear a lot of that. And you're going to hear a lot of that from your friends, from VCs.
Family,
everywhere. But I think getting back to my first point, just follow your passion. If you really believe in it, you need to do it. And I think, getting to VCs, just if you look at the people, look at the companies they've been involved in, look at where they are, what they do, and just try to find this connection that's going to differentiate you from other people.
That's the lesson, I think, of this. I mean, it's funny how we forget the value of a warm intro. And I contact guests all the time, and sometimes I go cold, but sometimes the warm is a big difference because you rate it on who it is. So if it's someone you know well that says, Philippe, you should probably spend 5 minutes with this guy, then it changes the game. So there you go. If you want to contact Philippe, find a way, get smart, and they can find more about you guys at accel.com, right? You guys got a great site. And your blog, what's your blog called?
It's Cracking the Code at Blogspot.
Cracking the Code. Okay, fantastic. We say on Silicon Reel, it's about the people, because we try to recognize that even though this ecosystem's tech, I think it is ultimately about people. I mean, you probably ultimately do invest in people, really, right?
Exactly. Yeah, it's all about people.
It's about the people, not the tech, right?
Well, I mean, you need both, but the right people, will find the right tech and the right differentiation.
Excellent. Cool. If you're listening to us on iTunes, you can see we're incredibly well dressed today on our YouTube channel. And yeah, fantastic. I'm glad we had the live audience. Thanks so much for your honesty. And it was a lot of fun. And I wish you all the best.
All right. Well, thank you. It was my pleasure to be here.
Okay. Take care. This week on Silicon Reel, Charles Armstrong, founder and director of The Trampery.
Every building we do is a laboratory. You want to design things that increase the likelihood that two people are going to bump into each other. It's a very inexpensive way to actually help groups of people to achieve more. There were investment deals that got done. There were sponsorship deals that got done. Collaborations got seeded purely by unpredictable, serendipitous conversations. When you see an industry that's ripe for disruption, you want to get stuck in. Be optimistic. Be excited about the future.
Silicon Reel presents Charles Armstrong, The Trampery.
Go out and take risks.